You can go ahead and start, Jenny.
Okay, Andy.
So go ahead and start the recording and then we can go.
We ask the questions that you may not think to ask and examine the issues that may not always be at the surface level. Northstar has helped numerous customers achieve, grow, and maintain prosperous business over the years. All right, our speaker for today is none other than Wendy Roberts. Wendy prides herself on creating winning strategies while helping her customers maximize their resources and their profits. As a CPA, she knows her way around corporate financials. As a former corporate finance executive and a startup CFO, Wendy offers a broad insights into finding solutions to help her customers achieve exceptional growth and financial success. She has a bachelor's degree in accounting from Indiana University, MBA courses at University of Tampa, and a years of experience counseling customers on financials and profitable success. Wendy is also a published author. She is originally from the Midwest and was raised in a working class family. One of her most favorite and cherished hobbies is cycling. She never fails to miss a weekend cycling in the Bay Area. Just a couple of house rules. For any questions, you can type it in our chat box. All questions will be answered toward the end of the webinar, and a recording will be sent to your emails. So, let's hear it from Wendy.
Thank you, Jenny. And thank you, everyone, for attending today. We know how precious your time is. So, my hope is that you will be able to get some really good nuggets here in our conversation today. And so, what we're going to be covering for today is you can go to the next slide, please, Jenny. Is an overview first of the 4 points of focus. And I wanted to talk to you about this holistic approach of how to build a very profitable, sustainable business with the ability to create an environment that will garner you a nice multiple if you choose to sell your business later on down the road. Then we're going to talk about some practical strategies and tools that you can use in your business. And then we'll open it up to questions and answers. Next slide, please. So, as we talked about earlier, this is part one of building a strong business framework. And what I want to accomplish in this webinar today is how you build a really good opportunity and navigate your way through the business world to create more growth, cash flow, and also have leadership within your business so that you then can step away to have a vacation or whatever the case may be. So, when we talk about the 4 points of focus, it really is a very comprehensive, holistic approach to run a business and not just create a good business, but a great one. And there are 4 pillars that we incorporate within any business that we work with. The first one is marketing strategies, which you probably have heard me talk about before. That is the bullseye, or the red, meaning targeting your customers. The second is the green, financial structure and growth, which we're going to talk about today. And that entails how to build a strong business, cash flow, management of a forecast, etc. That's the green for money. The orange is operational excellence. And this talks about standard operating procedures, having great technology so that everyone talks to each other. Those systems are talking. People know how to use those systems. And then the last is the blue for trust, people and team building. Because unless your people believe in your mission and your vision, you really don't have a very strong company. Our proposal is with an opportunity to create that environment where you set the tone at the top. you will build not just a good company, but a great company. Next slide, please. So when we talk about building that financial framework, which is what we're going to talk about today, and that's the second pillar that we talked about, the green, which means money. We want to discuss how a business framework can build growth, how you can build strength in your company to help you achieve your financial goals. Because without some goals, you can't really move the needle very much. So having financial goals helps you build better cash flow, better opportunities to invest in your business, and be able to scale it if you choose to do so. The second area that we talk about with financial framework is identifying and managing risk. Now, why is that important to business owners? Because if you don't understand what your risks are, you don't know what your opportunities might be. So if you manage your risk, it puts you in a better position to create opportunities, again, to grow and scale your business. The third around financial frameworks is having informed decisions. If you don't know what your financial statements are telling you, and they do tell you a story, you're not able to make informed decisions. I want you to think about it for just a second around the financial framework and your financial statements, the reports you pull out of QuickBooks or FreshBooks, whatever the case may be. If I tell you that looking at your financial statements, and that's your balance sheet, your income statement, and your statement of cash flows, I can tell you where you've been, where you are currently, and what the potential is for the future. So it tells you a story about your business. If you understand what the company is telling you through the financial statements, it'll help you create more and better informed decisions. Also, having a very strong financial framework helps you improve your financial performance. If you think about whether or not a bank looks at your financial performance, or if a potential buyer looks at your financial performance, the stronger you have that picture for them or the story, the more likely you're going to get a loan, and the higher the probability that you'll be able to sell your business. So let's talk a little bit about legal structure. Now, as Jenny mentioned, I published a book last year about the 4 points of focus, how to build a strong, profitable business. Within this book, we talk about the legal structure. This to me is like the number one thing when you're starting out as a business, or if you're thinking about selling your business, or if you're thinking about bringing on a partner. Whatever the situation may be, you want to look at your current legal structure and see if it is the right mix for you at this time. What you decided to do maybe 3 years ago isn't serving you today. So we want to make sure those legal structures serve you today and for the future. So we're going to talk about each one very specifically, and I'll go over them, and then at the end of the session, if you have any questions, be more than happy to go into a little bit more depth. But the types of legal structures we have here in the United States is sole proprietorships, general partnerships, or they also could be limited liability partnerships, which many law firms have LLPs, limited liability companies, which are known as LLCs, corporations, which can be elected as a subchapter S, or a C Corp, which they are normally a C corporation, but you got to elect a subchapter S status with the Internal Revenue Service. We have cooperatives, and then we have non-profit corporations. So let's go into depth a little bit more on each one of these. The first one is a sole proprietorship. Now, this one is the easiest to set up. It's very easy. These are usually one person or two person. I mean, it's basically sole proprietorship. It can be you as the main sole proprietor and perhaps your wife or your spouse as your employee. But they're very easy to set up. They're not subject to the FTB $800 fee. Again, they are go get your business license and you're ready to go. There's usually no paperwork required. You don't have to register them with the state of California. The only thing you might want to register is perhaps a fictitious name. You do have complete control over the sole proprietorship, and you're taxed at what we call Schedule C on your 1040. So it's just the one form that lists all of your income, all of your expenses. Now, one thing I should mention is that with a sole proprietorship, what we call Schedule C, you do not have limited liability. So you definitely want to make sure that you have insurance, errors and omissions, whatever the case may be, in order for you to have some comfort in case you were sued, whatever the case may be. So sole proprietorships tend to be much smaller than let's say $1 million companies or higher. If you're in that $1 million range, I would suggest that you look at a different type of structure. So let's get into general partnerships. Again, these are easy to set up. You do need to have some type of partnership agreement. I would highly recommend this. If you want to call it an operating agreement, whatever the case may be. But you don't necessarily have to have, quote unquote, formal paperwork like you would in a corporation. However, you still need to register it with the state of California. And the partnership distributes the profit and losses based on the partner share. Now, there are some exceptions to that in tax law. I'm not going to get into that right now. I just want to keep it very simple. So we have what's called a general partnership. Let's say if you went into business with another partner, each of you own 50% ownership. 50% of the profits would go to you on what we call a K1 that flows down to your personal tax return, and 50% would go to your partner that would flow to their tax return as a K1. So there is a partnership return that's required to be filed. It's a Form 1065 with the Internal Revenue Service. It's a 565 with the state of California. In my example, where each of you own 50%, each of you would get that K1, of which you then would report that on your individual income tax returns. Now, there's also a limited liability partnership known as an LLP. And you will see in various industries, like I mentioned attorneys before, they will establish an LLP. If you want to know more information about the LLP, feel free to reach out to me. It does have some distinctions from the general partnership. Now, let's go to the limited liability company, LLC. Now, these are probably the most popular, or probably the one you hear about the most, maybe outside of a C corporation or S corp. But they tend to be very popular. And the reason is because they can be operated as a single member, very much like a Schedule C, but it has limited liability in case you're sued. So it does have that umbrella of limited liability that if you have a concern about that, you may want to consider adopting an LLC versus a sole proprietorship. Now, it does have the flexibility of a partnership, as well as it can be taxed as either a partnership or a corporation, but you do need to make that distinction. I will tell you, in the state of California, if you're just identified as an LLC and don't elect either a partnership or a subchapter S corporation or a corporation, You are subject to what we call the gross receipts tax. So many business owners don't know about this and they get caught paying a tax on the gross receipts brought into the business, and you may have an operating loss. You may have lost money, but you still owe this tax. Never a good option. So do pay attention to that. Whoever you incorporate or whoever you had to choose, either some of the online services or with an attorney, do make sure that you follow through with the proper election, either a partnership or a corporation. And then the last thing that I'm going to recommend is an operating agreement. Super, super important for an operating agreement because it tells how you're going to run the business. So if you're a single member, it's easier, right? If you're a single member, it's a 568, and for IRS, it's just a regular Schedule C. But if you have two partners or two members or more, then you need to elect a higher level, like a partnership or a corporation. Do pursue and work with an attorney on getting an operating agreement. It will save you a lot of headaches down the road. I have worked with some of our current and past customers trying to eliminate issues that have come up around an operating agreement. It does help prevent misunderstandings down the road. Now, let's talk about corporations. So again, corporations are limited liability for the owners. They're known as shareholders. Now, the beautiful part about a corporation is that you can raise capital through the sale of stock. And if you're thinking about selling your business down the road to, let's say, a strategic partner, you want to be a C corporation, not an S, because there are certain limitations with an S corporation. Maximum is 100 shareholders. They have to be either individuals or a qualified trust. You cannot have foreign business owners as part of a S corporation. Now, the distinction between a C corp and an S corp is that for a subchapter S corporation, you make the election with the Internal Revenue Service. So that is an election that you have to do within a certain period of time. Usually within 2.5 months of incorporation or the start of your fiscal or your calendar year. You're probably going to be fiscal year if you're a corporation. So thinking in mind, what's the difference between an S corp and a C corp? In an S corp, the income or the loss flows through to your personal income tax return. That's the advantage. It does not get double taxed if you take money out as distributions. In a C corp, you have to pay the corporate income tax. Right now it's 21%, plus the state of California, which roughly is 9.3. We'll call it 10% for sake of discussion here. So there are some advantages with being an S corporation, but there are also advantages of being a C corporation. So it really takes you, take your time, talk to people, talk to an attorney, talk to a CPA like myself, so that we can tell you what some of the distinctions are for your situation. And you can always elect to revoke your S status if you choose when you first started up to be an S corp, but now you want to sell to a strategic partner as an example. You might want to revoke your S in order to be more attractive to that strategic partner as a C corporation. That you can also do. The word of caution here is that once you elect to revoke your S status, you have to wait 5 years before you can revert back to an S corp. So the decision that you want to make or that you need to make in certain situations is very important. So it's important for you to understand all the pros and cons to all of these different types of legal statuses and structures. Now let's go to a co-op. Now these are more what I'm going to say agriculture in nature. I see a lot of co-ops. You probably have seen co-ops around, and you've got members that share the profits and the losses of the business. You would have control over that co-op, and you might want to use it for, like I mentioned, goods and services or for agriculture. Co-ops tend to work really well in that environment. But you're probably not going to see it in other industries like professional services. You could, but more than likely you're going to see either a partnership or a corporation or an S Corp status. And the last one that I wanted to talk to you about is nonprofits. And I'm sure all of you have either contributed to a nonprofit, have volunteered for a nonprofit, or maybe sit on a board or an advisory committee for a nonprofit. And what's nice about nonprofits is that their net income or net income is not taxed. You might have a net loss, obviously, but there's no tax on any of the profits. The downside is that you're not allowed to distribute profits like you do in an S corporation or a partnership. So that is the difference. And you do need to be designated as a nonprofit so that when you get charitable contributions in from contributors, you keep a record of that and send the proper documentation to that contributor so they can deduct it on their tax return, their individual tax return, or it could be on their corporate tax return. So what you do want to make sure you keep really good records. I highly recommend that. And within a nonprofit, you could have reserve funds as well as non-reserve funds. So those reserve funds would be designated for a certain situation, whatever that case may be. Now, most nonprofits usually provide social services. So I'm sure many of you are exposed to many nonprofit organizations. One of my favorite is Best Friends. They're out of Utah. They are promoting no-kill shelters for animals like dogs and cats and rabbits and etc. It's one of my very favorite nonprofits. Another one here in the Bay Area is the Marine Mammal Center, another great nonprofit that helps promote and get sick mammals such as seals and sea lions back out to their environment after they have been rehabilitated. So those are types of nonprofits that would be something you would be subject to if you decided to go with a nonprofit. Again, my caution is make sure that you file all the appropriate documentation to be recognized as a nonprofit, and make sure that you have really good records so that you then can, if it's ever questioned about your nonprofit status, you'll be able to support it that you truly are a nonprofit. Now that we've gone through all these legal entities, it really, really is important for you to have a financially fit business, regardless of what legal structure you choose. And remember, I just mentioned, if you're a nonprofit, make sure you've got good records. And I also mentioned when we were talking about corporations about how the financial statements tell the story of your business and why is that important. So when you are financially fit, when you have your financials under control, you're able to better track your income and expenses. Wouldn't you like to know on a monthly basis or quarterly basis or annual basis whether or not you're making money or losing money? Many of our customers that come to us, their financial statements are not in good order. They're either tried to do it by themselves or they've hired somebody that really do not understand the mechanics of bookkeeping and accounting. So a lot of times we have to get them into a financially fit status, the financial statements, into a financially fit status. So then we can start working with the business owner to grow and scale that business. So it's very important to track your income and expenses. The next is creating budgets and forecast. Having a budget keeps you fiscally responsible. It keeps you from overspending. And forecast help you look into the future. Now I kind of combined them both together and just call it a rolling forecast over the next 12 months. The nice thing about a forecast is if you plan to hire someone, let's say 3 months from now, budgets can be static. Forecast can be dynamic. So we are talking about creating a forecast to allocate funds to hire that person in 3 months. And what does that look like? Can we afford it? Can we afford the amount that we think we want to pay? Or can we pay them more? Maybe we can hire 2 people, or maybe we are too aggressive on what we want to pay and we need to scale it back. That will help you formulate what type of person you need in order to fill that future spot. The next is how to manage cash flow. We all know, no matter how long you've been in business, whether it's you're just getting started or if you've been in business for 20 years, cash is king. Cash is king because without cash, you cannot survive for a very long period of time. You're going to go out of business. So managing your cash flow also rolls into that rolling forecast I just talked about. Knowing where you spend your money and how you spend it is super critical. The better you can manage the cash flow, the higher your profits are going to be. Yes, you're going to have to pay taxes, but you'll be able to take what's left over after taxes and create a scalable business. Now, we all want to comply with regulations. We have to do that. It's part of doing business. So if you're in an industry that has high regulations, for example, we deal with a lot of landscapers as part of our offering of services. And we also deal with a lot of contractors. They have certain regulations that they have to follow through with, as well as certain licensing. We also deal with a lot of attorneys. They have a certain licensing. So depending on what industry you're in, you might have regulations that you need to comply with. I highly recommend that you stay on track of that so that you don't get into a situation where you're going to have to pay a fine or penalties. And then last, when you have a financially fit business, you're going to make better decisions. Think about it. If you have a 12-month rolling forecast, you've been managing your cash flow, are tracking your income and expenses, you know where your business stands on a monthly or quarterly basis and an annual basis. Don't you think you might be able to make better decisions about hiring that person and when you need to hire them and how that all would lay out? What are they going to contribute if you hire them? How much are they going to add to your profits? All of that's very important. So if you know and manage your cash flow and you manage your financially fit company, you're going to make better business decisions. Now, once you have built this financially fit structure, right? The results of this is super important. And that's increased profitability. I think it's common sense that if you pay attention to your business, you make sure you have a financially solid system, you're going to make more money. You're also going to increase your cash flow. Think about it. If you're making more money, there's more money in my pocket, or there's more money that I could put back in my business so that I can scale it. The third thing of having a solid financial system is that reduced risk. We talked about this earlier in this session. Managing risk is super important because it creates opportunities for you that you never have other had. And you're like, well, how is that possible? Think about it. Risk is on one side, opportunity is on the other. The higher your risk, the more you're having to spend time addressing that risk. Whereas if you reduce your risk and manage it, you've got it under control, you then can pay attention to more opportunities that come your way. Do you want to be proactive, creating more opportunities? Or do you want to be reactive? That's what risk implies. If you don't reduce your risk, you're having to be reactive. That's never a good place for a business owner. You want to be proactive. And then last, as I mentioned earlier, it helps you improve your decision making. The better, more solid your financial systems are, the better you're going to make business decisions that will create those opportunities to scale your business. Now, let's talk about the flip side of the coin. What happens if I don't put time into a financially fit business and a system? Things like financial problems could happen. We have talked about several times in this session about cash. Cash is king. If you don't properly manage your cash flow, you're going to have financial problems. And the more the financial problems, the higher the likelihood that you will not survive. So having a strong financial structure helps you avoid financial problems. And let's face it, running a small business, there's highs and there's lows. When you have highs, it's a good thing. But when you have lows, you want to be able to have the cash to be able to, as a backdrop, to get you out of the low and move to the next high. That's just the way the business world works. The other issue with ignoring your good, solid financial structure is it prompts you with poor decision making. Remember, I said to you, which would you rather have? A reactive situation or a proactive situation in your business? I think most of you would want proactive. If you're having to react all the time in your business, you may be making poor decisions. And that's only going to amplify the problems you already have. Whereas if you are able to manage your risk, you'll make better decisions and create more opportunities for your business to succeed and to scale. As I mentioned earlier, you want to make sure that you comply with regulatory. I realize it's a pain. Nobody wants to do it. But if you want to stay in business, you need to. And it will help you avoid fines and penalties. So avoid compliance issues. And for many of you, you may have remembered situations where there were poor decisions made. Financial statements were either fraudulently proposed or represented, or they just really made bad mistakes. And so many of these companies you probably have heard of, and you know what happened to them. They all failed. Enron failed, Lehman Brothers failed, WorldCom failed because they didn't properly manage the business. Now, let me give you a couple of financial tools, right, to kind of get you on the right track or maybe reinforce maybe what you're already doing. So the first one is to create that forecast that we're talking about. Create a 12-month rolling forecast. Build in your budget, and from there, do the forecast. Choose what things you are going to be doing potentially to improve and run your business. Creating that forecast will help you make, like we talked about, better decisions. It will also increase profitability because you'll have a plan that you are going to be implementing. And as part of that implementation of your forecast, as well as other things, set what I call 90-day sprints. These are goals, these are things you want to accomplish every quarter for the next year. And then measure yourself to that. Set up metrics so that you know whether or not you've accomplished that 90-day sprint. And I would suggest choosing no more than 5, because that's going to be overwhelming for you and your team if you have more than 5. In fact, if you're just starting out, go with 3 and focus on them. And as you accomplish them, check them off, measure yourself, how well you did, and then on the next quarter, add a new one. So keep the same number, 3, 5, whatever the case may be, but check off the ones that you accomplish and then move on to the next quarter with a new one and measure yourself. Continue to measure yourself and then look at your forecast to see, am I achieving the results I want to be able to achieve? And then finally, invest in your team in financial literacy. The more they know, the better they're going to be able to perform in their job function. Remember the 4th pillar of the 4 points of focus, people and team building. If people understand your mission, your vision, where you want to go with the company, and you provide them with the education for them to succeed in their position, you're going to be in a much better spot to enjoy those profits that are coming from your business. It's simple. It's a simple, simple formula. The 4 points of focus is simple in concept to understand. It's hard to implement. So these are some financial tools that I'm suggesting that you take a look at. These are things that I think can help you move your business forward. If you're confused about a financial forecast or whatever, please reach out to me. I'm more than happy to talk to you about how to do that. I can even give you a couple examples that we use as templates to get you going. My objective here, my why, you be successful, to help you reach your North Star. The North Star is a Polaris. It's the brightest star in the sky. So my why, my hope is that you find your bright star, your North Star. And if you need help, reach out to us. I'd be more than happy to help you. So as I mentioned before, there's a here that you can, here's a QR code. It's available on Amazon. The things that we talked about today are detailed in this book. Again, it's the 4 points of focus. It tells you how to build a strong, profitable business. And if you feel that you need a little bit more discussion, I offer a 30-minute consultation. Or if you like what you heard today, you can contact us and we can talk to you about how we can start working together. So on the next slide, you're going to see some of our services. And again, we've got the coaching, the advising around the 4 points of focus. We also help you build those customized cash flow, as well as we offer on-demand CFO services, metrics to help you measure yourself, like we talked about before with those 90-day sprints. And if you're really wondering to know, what is my business worth? What is it worth today? We can help you build an evaluation for that business. So with that, I want to say thank you. And this is how you can connect with us. Here is our office number. Our email address is info@northstar-sp.com. And then that northstar-sp.com is our website. So I think we've got about 5 minutes for questions. If there are any questions, Jenny, I'd be more than happy to answer them.
Yes, Wendy, we have some questions from our chat box. So the one is, can a person be owner or partner of both for profit and non-profit entities?
Oh, that's a great question. Yes, but they need to be separate entities.
Okay.
So
So
yeah. They need to be
Okay.
separate entities. Like you might have a for-profit business that's incorporated, and then you would go through the process with the state of getting a corporation. And then a nonprofit might also be a corporation, whatever the case, but it's a separate entity. So they need to be two very distinct entities.
Got it. So the
I
other
will
one
also do-
is
I'm sorry. I will also do this. Um, if you have further questions about that, either reach out to me or I'll be more than happy to refer you to an attorney. They can go over the pros and cons of a nonprofit with a for-profit combination. Whatever the question was, it was a pretty generic question, so there might be some specifics in there. I would advise that individual who asked that question to seek out legal counsel.
got it, Wendy. Thank you so much for that. So the other one is in a nonprofit that supports artists by selling the items at cost plus expense. Do you have to give the donors the letter of donation with the 501c3 number?
Okay, that is, I heard profits and expenses. So I'm not sure if I understand the whole question, but I'll just give you like what I know of nonprofits. And again, I would suggest you seek legal counsel on very specific questions as it pertains to whether or not you're truly eligible as a nonprofit. Uh, so when someone contributes to a nonprofit, either through charitable donations, whatever the case may be, you then are, as a nonprofit, you give them back a receipt saying, this is what you have contributed on behalf, and what you potentially could be able to deduct on your personal tax return. Now, the expenses that come out of the nonprofit, they can either be related or unrelated, as well as there could be unrelated business income in a nonprofit. Now I'm getting really down into the weeds. So this is where you have to separate the income and expenses from the profit, the nonprofit that are related to the nonprofit, and non-related items such as income. Those non-related items could be subject to tax, an income tax, whereas the related might probably are not going to be. But again, that particular question that was asked, it sounds like there's more stuff that needs to be discovered in the conversation to give them a really good answer, because nonprofits are complicated and you want to make sure that you follow the law, because if you don't want to be in a situation where you have nonprofit that you lose your nonprofit status. So hopefully I answered that question. And again, with either seek out, uh, I would say seek out advice and legal advice based on how they want to structure that nonprofit.
Yep. Thank you so much for that, Wendy. So for the last one, if my business is profitable but I still feel cash trapped, what could be going wrong?
Ah, great question. Okay, so I would take a really hard look of where your expenses are going. Are you paying your people too much? What's the percentage of the profits that you are actually generating to your industry, to the industry that you're in? I would take a really hard look at your expenses. Anything below the line, what I call below gross profit, is where I would start first. I'll give you an example. There may be something on your credit card that gets charged automatically that you forgot about. And it's just there every month, and you keep on saying, yeah, I'll take care of it, I'll take care of it. And next month, it continues uh, to accrue or being charged against you, but you don't take an action to get rid of that expense. Getting a budget slash forecast, when we talked about over the session, helps you better focus on where you should be spending your money. If you clamp down on some of those expenses that you really don't need, you're going to see your net profit increasing. I hope I answered that question.
Yep. Thank you so much, Wendy. I think that's all for the questions.
Awesome. All right. Thank you, everyone. We know your time is valuable. We appreciate you, and we hope you have a wonderful day. Thank you.
Thank you so much. Have a great day.